Hello, face. Put a smile on it. How are you, Mike, Kevin, Patrick? Patrick, you're always here. Ziggy, how are you, my trading warrior brother? Windsor 99, everybody. We're going to have a great session here today. Get ready for it. Nick's here. Greg is here. Steve's here. Hi, Sandeep. And, of course, we have Adam Button here with us today. So I want to start off here with EG and just introduce myself to everybody. So here I am. Still a little bit dark here in San Diego, but here's Euro Pound. Euro Pound to me looks incomplete. We have one drive here, two drives here. They've had some opportunities to break down under 87.50, can't do it, so I'm looking for a rally to new highs. So what do we do when we're constructive or bullish Euro Pound? Our preferred long is the Euro, our preferred short is the Pound, which brings me to what I think is the trade of the day, and that's a guppy here. Okay, we've had our third drive. I talked about it yesterday. I think it could be short with stops maybe 50 pips above the high in case there is a stop hunt. To me, it looks like we are topping out. Look at this glaring divergence at the last high, 54. I think it's reasonable to look for targets maybe initially down around 45.30, so that's about 120 pips, but I actually think we could trade 44 to 43 in the days to come. Give me a Y if you understand my analysis. It's not important that you agree with me because we're all captains of our own ship, correct? So I'm just highlighting a few things I see. While this is happening, perhaps Euro Yen still tries to grind higher. It's making a new high here. There's a lot of major stuff up around 129 to 130. So you look at a chart making a new high like Euro Pound, and you compare it to the guppy that's reversing from new highs. That makes this my preferred short. And I'd be careful about marrying anything into the NFP tomorrow. Remember, we have the NFP tomorrow. So if you have some partial profits before the release, put it in the bank. Do I have an agreement on that? Or even be flat before the NFP and look to recommit? Okay? Because I guarantee you the markets will be here after the NFP. I want to make sure that your equity is too. All right, so just a quick update on the indexes, and then I'm going to turn it over to someone. But S&Ps failed from this area I talked about yesterday, okay, and talked about the 37.10 off number. It went through it by a point. I think even Grega is looking for a retest of the lows here. So we have Elliott wave structure, and this is a freebie for everyone. You need to consider becoming a subscriber of ForexAnalytix so that when you have an idea like I do, you could go and check, see what Greg is thinking on Elliott waves, see what Nick is thinking about in harmonics. Okay. And also what Blake is thinking and Steve in basic technical, and what Steve has seen in the sticks. People that have been following Steve's analysis knows that he has a pretty high hit rate. Followed a lot of great trades, such as the Aussie from last week, the silver short from last week. So that's what I wanted to get across to people. So that's what I'm thinking is a guppy. It's a relative weakness, potential shorts, looking to be really pared down before the number tomorrow, but there might be some risk off. So even if we don't get the type of break I'm looking for in the S&Ps, Greg is saying a retest 404, that's still 18 handles. And if it gets fast to the downside, I still think there's a chance for 23.75, and then maybe something else is happening. But Greg's analysis is at least a retest before we rally back to new highs at 24.60. So let's see who's in the house with me today. Also, oh yeah, and CAD Yen, still think it's in a topping mode. If you took it yesterday, you had 100 pips at one time, and we just had we're pressing the top up here again. But look at the RSI here. Even if we make a new high, there's going to be some pretty negative divergence. And all these charts I've shown you so far is a 4-hour TF. Okay. Hi, Cyril, David, how are you? So let's see who's here. We have Steve here. Oh, thanks, Cyril. Yeah, I'm wearing my Budweiser shirt. I'm not wearing my ForexAnalytix shirt. So, hi, Steve. How are you today, partner?
Good. How have you been?
Good. I'm doing great, man. So, we got a lot of rich content for people today. And
indeed.
I won't even sing.
Yes, by the way, we just launched, like, what was it, around, I think it was like 30-40 minutes ago, a new blog post about the Turkish lira. So if you want, I know it's...
Yeah, go ahead. Yeah, because I remember during our meeting, we were talking about the emerging market currencies and...
Exactly, and how plenty of them were showing signs of a reversal. And,
yeah, you showed the ruble, and Blake showed the peso, and the lira's under pressure.
Exactly. And as you remember, as very usual we see, they might be correlated to each other, but they started falling like a group of cards. So, for example, you remember that I was showing the potential to USD ruble reversal since weeks ago.
Yeah, let's see your screen, buddy.
So, sure. So if I'm not mistaken, probably it was the first one that started turning, and then we're going to obviously move to the popular ones. For people that are watching in for the first time, you shouldn't worry. We're going to go ahead and, show whatever you like. Actually, you can also post questions, etc. So let's begin by that. Let's show at the USD ruble, which I think is the more mature, having to do with the reversal. And we had been seeing this chart since we were actually down here. We had a huge wedge. We had a breakdown, a retest of the wedge,
right,
moving higher. Now we got a triangle, and as it's looking, we're breaking out of the triangle. As long as we remain above 54.30, let's call it roughly, I think that maintaining a bullish bias for for a bigger recovery is.
It'll be interesting. It'll be interesting. It's my turn to interrupt today. So it'll be interesting to see what kind of impact the first meeting between President Trump and Putin, how that goes, and maybe it'll have some impact. A very close, very scrutinized meeting here today. So basically it's saying that maybe Trump walks away with a victory and the ruble weakens. So let's see. It's going to be fun to see how the fundamentals maybe tie in with this move.
It's definitely going to be a very weird dynamic, we have to say, because listen, no matter what kind of a scenario we take, I mean, either the one extreme scenario that Trump was collaborating with Moscow even since before the elections, or even if we take the scenario that Trump has nothing to do with that, still the whole dynamic that has developed due to the allegations, etc., etc., etc.
Well, he's not going to bring that up. Not if he wants to have a warmer. I don't think in the meeting he'll bring that up. Because he barely believes it himself. He didn't admit that he believed it happened until maybe a week or so ago. So I think they're going to focus on, of course, North Korea and possibly something happening in Syria, and maybe Trump. since he's been warm to Putin all this time. If he walks away with some type of Russian cooperation, that's going to be a win for him. It'll be interesting to see what the ruble does. Just my humble view.
You're absolutely right. But my point is that one way or another, of course, he's not going to bring that up. But I think that, you know, his attitude definitely will be affected, you know, by the whole theories and allegations that have been spinning around. So yes, it's going to be a very interesting thing to see what's going to happen. And I do agree with you. I think that North Korea is going to be in the agenda for sure, especially following the possibility, because I'm not even sure it's certainty yet, that we had a ballistic missile launch a couple of days ago.
So impressive.
Yeah, passing from the USD ruble to the USD MXN, which was our previous blog post, I think we now have a confirmed break above the wedge. Obviously, nothing works in a straight line. We might get retracements, but I think that a deeper correction following the plans from 22 to below 18 is in the cards. So I think this is also a very interesting trade, especially whoever followed it, you know, from 3 days ago. Obviously, you know, they have a better risk reward at the moment.
I want to ask you, you know, someone's asking about technical, and besides just, you know, making calls and showing why we think certain instruments are going to go to certain areas, that's a falling wedge. It's classic textbook. You know, I always ask people, how much, once we have a wedge breakout, of a retracement should you look for? You know, I go halfway back, 61.8 back. Out of the Bible that I learned, Edwards and McGee's.
I have an answer for you.
Okay, go ahead.
I have an answer for you. How much of a move did this wedge in the USD-TRY produce? Do you see this?
Which wedge? Oh yeah. Oh yeah. Okay. But right, in general, it's 100% retrace, is what I was going to say. But your point is,
I agree.
It could be a launching point. It could be a launch. I guess it depends where it is in the wave structure, how much you can expect, right?
And that's a good point. I'm not going to go into that because Grega is going to be with us for the last 20 minutes before the interview. Okay. Nick is going to be on before that, so she can, you know, she can show us some of her harmonic magic. But I can tell you one thing for sure: this specific pair, the Turkish lira against the USD, is in an uptrend since 2008, and since this wedge is also breaking to the upside, fighting a well-established trend makes no sense. I mean, this is a clear technical break.
You know, and you had a little divergence. You had a little divergence at the highs, but the readings are way above my ideal readings for looking for a reversal. I mean, it looks like you had a 90 reading at the high, the previous high, and the second high was what, in the 80s? Yeah, that's a lot of mo.
Said plenty of times. In a bullish market, on a daily chart, for example, because, you know, obviously lower time frames like an hour or 4 hours, you know, can do whatever they like with RSI. But on a bullish market, you don't want to see the RSI break below 30 in a very strong move, you know, even 40. So in this case, for example, we did have a correction lower, a correction that actually lasted for several months. But still, first of all, we didn't manage to penetrate, besides intraday, more or less, below the 38.2, which is
which is a pretty shallow retracement after a run like that.
Exactly.
And it worked off its overbought condition more in time than price.
Exactly. And RSI did not break. It briefly broke below 35. It didn't even reach 30. So I think, you know, that everything points to plus the 200 DMA, as you've seen, if you go back in the chart, has been a good indication of where the trend is. And, you know, we tested it here several times. and we're moving above it once again. So, and we're again back above the 50. So I think that everything points that from a risk reward perspective, this is exactly what you want to see. A clean technical pattern on a very clear trend. And even if you go down to the 4-hour time frame, people can see that in our blog post. If you go to ForexAnalytix and the blog, you'll find it on top. This is also on a 4-hour time frame. This is also an inverted head and shoulders formation. So the inverted head and shoulders formation is the one that created the initial thrust that took us out of the wedge, and now
Oh,
the
I see it.
broken wedge dynamic.
And maybe you'll get another one. You'll get another one up here, and maybe a pullback, and today's high could end up being the neckline from the high from a few weeks ago that it didn't quite get through.
It is very likely, having to do with waves, as you mentioned it. Gregor's view is that this was a fourth wave, actually.
Okay.
So if that proves to be the case, it means that we're actually looking for fresh highs.
Right.
Perhaps
Terminal.
as he mentions, perhaps the psychological 4 level. Perhaps.
Okay. Well, is that going to finish wave 3 or wave 5 at new highs? So it's going to be 5 of 5 of 5 up there.
Yes. So perhaps a bigger reversal following after that. Yes.
Wow.
But we're not there yet, obviously.
Yeah. Yeah, that could take months.
Somebody is asking for the DAX, and I'm going to bypass momentarily the rest of the questions because I happen to see that at the very same time that I was actually looking at the DAX. That's why I'm going to go there, and we actually posted some intraday analysis talking about the DAX simply because we also wrote it yesterday. I think it was that I think we talked about it on this webinar as well. Yeah. That probably this was a bear flag that the DAX was producing, because obviously this kind of price action had nothing impulsive in it, and today probably proves this case because we've broken below the bear flag, which means that we should see a move to the next support zone most likely, and the next support zone is 12,100, at least in my opinion. So I think this scenario is even more likely now. So the next move for the DAX seems to be lower once again for at least one more leg. And we see what kind of a reaction we get from there, and we decide. So it's 12,100, then we have 12, then we have 11,800. So those are the next support zones that I have in my screen, and those are the ones I will be monitoring, because somebody, of course, cannot forget that we are in a very strong uptrend. And yes, this is a reversal. We have been talking about it, since a long time ago for people that have been monitoring, but nothing can tell us with certainty that this is a big reversal. I'm not seeing
it won't. I don't think it'll be such a good sign if we start trading back underneath your dotted up channel that we had like months of a throwover on. So to get back in the channel could change the game. Don't you think?
Yes, it can.
Change
but
the
I
game.
think
I'm sure they're going to try and buy them there. Yeah. Yeah, that one.
There will be, you know how it is. The market is currently very strong, and there are a lot of bulls. So, the initial effort to actually turn bearish whenever that happens is going to have to face a lot of buying pressure. That's the only sure thing you said. So I don't expect, even if this is the reversal, I would not expect it to be without bounces, and always a turn has a lot of doubt in it, a lot of doubt. Do you remember how many people were doubting and selling the US indices once they actually turned for this new bull leg that started 7 years ago? I mean, initially everybody was doubting the beginning of the what was then the next bull run, because they weren't sure, they hadn't confirmed that this was a bull run. So everybody was doubting.
Wally Hussein is asking if he could see these webinars. Yes, we have a YouTube channel. Holly, if you can't be around, these aren't great hours for you. So all the sessions are recorded on our YouTube channel. Someone could post that link for Ollie. And also Barry's interested in what you're seeing in Swiss. US dollar Swiss thinks it looks like
Sure.
a 1 hour head and shoulders
Sure,
bottom.
but before we go there, before we go there, and I know that most people have stopped monitoring this, but from time to time, on occasion, I've been mentioning it. If you remember, I would like to show once again Euro Swiss, because we had an attempt to break from this channel. We failed, and we're making a new attempt. And this is something I'm monitoring. The reason I'm monitoring it is simply because this is my indication from a technical perspective if I want to be involved more with USD CHF or Euro USD, right? I mean, if I want to be long, either of the two against the USD, this pair is going to tell me if I would prefer to be long the euro against the USD or perhaps the CHF against the USD. So in this occasion, a break perhaps tells me, if this gets verified, that if I want to be short the USD, I'd rather do it against the euro. Alternatively, if somebody believes that they will be long the USD, they'd rather do it against the CHF. So having said that, let's go see what our friend is asking for the USD Swissie. So let's go.
I think 1 hour TF, Steve.
Okay, 1 hour time frame. First of all, as you very well say, the telescope first. Okay, this was a trend line I was monitoring, which we falsely broke below it. But this was a very interesting level that we found at the bottom, because it was the exact level that provided us the low on the November election, US election day. So we found a low at the exact low of the US elections and the initial reaction to Trump's victory, which was a risk off, if you remember. So the area that provided a low is very important. So that's one thing. A second thing to say here is that, okay, this was a nice reaction, but the basic element of a reversal is still missing. And what is that? To at least see some kind of a higher high, which we haven't seen. For the time being, we've been registering lower lows, no higher high yet. So confirming a reversal is still far away no matter what. Now let's go ahead and pull a shorter time frame for our friend, although I prefer the longer ones, but sure, let's see what he's seeing. This is a 4 hour. I can go down to the 1 hour. That's not a problem.
Okay, so he's looking at that. Yeah. Oh, head and shoulders top. Okay. Yeah.
Yes. Yes. I think it's quite clean, actually. Yes.
Yeah. So that would say there still could be a little bit more upside in euro. I know that Greg has a look for a failing rally in euro here, Steve. I put some fibs up on euro.
He does,
I don't think,
and I would gladly show it for him, but we have no reason to do that because Greg is going to
he's going to be here. Yeah.
Yes. So
hey, you know what? That's a good eye, Barry. Nice eye.
Yes.
Really good eye.
You see why I say that the daily is important in any case, because look at this. Yeah. Even if somebody does not monitor here, obviously the head and shoulders formation on a 1 hour chart is impossible to distinguish here.
Well, you know what? It also looks incomplete to me because you have two drives. I would expect one more. So
likely, but
yeah, that would work. That would favor his 1 hour time frame look. So
yeah, but what do we see here? We see a shooting star yesterday on the daily. We see the inability of the pair to recover even to these highs here, to 97.50, let's call it roughly. So yes, we got a reversal from the election lows, but is that enough to turn us bullish? No way. We need a lot more evidence to even consider that. And if we go to the euro USD, I mean, obviously, you're also going to see that you remember the first area that we were looking to test, which was this. It was the support of this ascending wedge here. And I said that it's roughly 113. I remember a friend yesterday asking to make parallels between now and another year in the Euro USD, and they said, listen, did we get a rejection of this big channel? Let's show it, by the way. Yes, we did. Does that mean that we have to turn bearish in the longer term? No, because let's see what we do in 113.
Steve, can you turn up your mic a little bit? You're a little soft.
Yeah,
there
okay. Is this better? Okay. So I said yesterday that, listen, no matter what happened from up here, still, let's see what we do when we test this level around 113. If we break below it, let's see what we do with testing 111.40, which was an important pivot here. And if we actually break below that as well, then we can have discussions about the longer term view for the current pair. But for the time being, what did we see? That the first soft support that we found provided enough buyers for the pair to actually already cover like 50% of the drop. So how could I be bearish the pair yet? I can't. So it is what it is. I'd rather have a strong signal and be a little bit late to the party, because if you actually catch a big reversal, then it's going to yield a lot of pips. Then try to jump the gun and most probably, find yourself.
Yeah, especially in front of the NFP, Steve. Do you know what the whisper number is? Because that's going to be a catalyst for the first at least 15 minutes tomorrow morning. On
no,
the
I don't know what the whisper number is.
I bet Stel knows. Stel, do you know what they're talking about? What they're looking for in the NFP?
Actually, I don't. I'm afraid. I know the for the forecast is 179K or 180K roughly. That's the forecast from the economists. But I don't have any more information, I'm afraid.
Okay. How about you, Face Community? Any numbers? 175. Patrick's saying. Thank you, guys. Okay. No, you can't get this webinar on PDF. I'm sorry, but you can watch our recordings. Okay, Steve. So tomorrow's going to be an inflection point for whether the euro is good or bad. Is that the way it's looking?
Definitely. And if we have a look at the DXY, we're also going to see why this is the case, and we get the same picture with the DXY. We had the morning star formation here, which is a nice reversal signal.
Right.
But just a candlestick formation is not enough. As we said yesterday, the very least we should be looking at is a close above 96.50, which was the lows here.
So maybe that first one was A or 1, and we're getting a B or 2 in here and put in a higher low.
We might, but I can tell you one thing, that there is not even the possibility of a DXY bullish party unless we at least close above 96.50. So,
yeah, that'd be another false breakdown trade, which are great trades. Yeah. Yeah. So you're right, Steve. And you know what? I'm learning more patience listening to you. Why, just to get a 30-point or 30-pip lead, compared to where we are now, or 50, why not just wait for the signal so that you have a higher probability on the trade? Instead of trying, see people, exactly. And I know it because I know myself, and what I've done is if you believe it, there's a possibility of that happening, that it's a false breakdown. You try and get a little bit of an edge by getting a lead, but it doesn't turn into a false breakdown until it's a false breakdown.
Now, having to do with oil, with crude, that another friend is asking, you remember what were the words yesterday? That expect a rebound from between 44.50 and 45.50, and we got a rebound from exactly 44.55. We are already decently above it. We're currently almost at 46. I'll reiterate what I said a long time ago when we said that we're going to rebound from here. I said that the first signs of weakness, don't try to sell into.
Yeah.
Yes. because it is very, very likely that we're going to see at least a second leg higher. So, you know, this thesis stands. Obviously, crude remains bearish as long as
Nick's looking for 50.
Below 49.
And you know what? Nick is in the house, Steve. She's here.
Nick is in the house, and you know something? It's very likely that she's right, because simply put, and then I'm going to pass it to Nick. We have a 42 roughly to 47, so those are $5. So if we bounce from here, it means 44.50 plus 5, 49.50 for equality of corrective legs,
Right.
which is exactly what Nick is looking for. And this is also where we find the 200 EMA. So I think that once again, Nick is very likely to be right. Anyhow, she's going to tell you all about it. I'm going to pass it to Nick. Nick, are you in the house?
And Simon, we covered the guppy at the opening.
Hello, can you hear me?
It looks like a
Hey,
three
Nick,
drop.
we can hear you now. Yes. Welcome.
Hi,
Should I pass
Nick.
the screen?
Hi, how are you?
Good, Nick. Great to have you. Thanks for stopping by during your busy trading
I'm
morning.
just frantically getting my oil chart ready. So
I gave you the screen, by the way, Nick.
Sorry?
I gave you the screen. We can now see your browser.
Oh, you did? Okay.
Yes,
Yeah.
we can now
Yes.
see your browser.
Yeah.
I'm probably looking at the wrong monitor then.
There you go. There's
Okay, now you
a
change.
dragon. What do they call those
You know,
things?
that's not my screen. Hold on.
What is that thing?
It's like a Fibonacci.
Okay, I think we can see the right now.
It looked like a sea creature. All right.
Yeah.
But it's probably.
You're going to
but
warn me
it's
when you're throwing me the screen. Okay, hold on.
We got crude now.
Can you see the
Yeah.
crude? Okay.
Got it.
Yeah. Hear me on investing.com, frantically. Okay. So the reason that I sort of, this was like for me, this is the futures, I've got the wrong chart up, CFD, but for me this was a beautiful 3 dives pattern. And when you see the 3 dives pattern, for me it always retraces at least 50%. So 50% put it, I think it was to like 50-10, you know, and that's so close to 50 that's, you know, and a spike through. So that's what I thought when we were down here, and that was before we'd seen these 2 waves higher. So yeah, you know, 2 waves from here puts us straight back to, you know, 50-10. Look at that, 50-10 again. So I think that's where we're going, and that's my reason why for crude oil. Yeah.
Nice
So,
look, Nick.
people are saying, you know, that they think a lot of the moves this morning were in the stocks and stuff were due to strong oil, but I really don't see it that much. You know, there were some quite crazy moves this morning, but it's before, you know, the US session. I always think, you know, everything's stopped on support, hasn't it? So let's see what happens. So yeah, I was going to talk about the Bund because that was the big news this morning, wasn't it? Hello?
Yes.
So, yeah, I'm just reloading my chart here because that didn't work very well. So I apologize. So the Bund, you know, just let me expand it and we can show you. So on a daily chart, you know, this Bund, if you measure it, has been making equal measured moves in correction. So we've had 2 waves. It's like a really irregular correction. So we had this sharp move lower, and then we had an ABC equal rally, and then a sharp drop, you know, and then an equal ABC rally, and here we are again. So we've broken this trend line support. So at the minimum, even if this big correction is still a correction, for me, the minimum I'd like to see this do is an ABC correction from this high. So if I use the Fibonacci trend-based fib extension, you can see here, put this on here, put this on here. I'm just going to change the colors so you make it easier to see, and take these off. Showing you all my tricks of how I work now here, aren't I? Okay, so here I'm going to extend the line and make it red. bright red so you can see it, an extend level. So that takes us down to here, so 156.80 if we make an ABC correction from this high. So that would mean this leg is equal to this leg, and that's what I'm looking for in the bund. So, but sometimes, you know, the second leg is only 61.8 of the first leg. So I'm just going to mark that on this chart and show you what I mean by that. So that would be this level here, and that's exactly where the bund has touched this morning, and it's these highs here. So potentially the bund could find quite a sharp support to bounce from here and back to here. Why is this important? Well, because all of the other bonds are following the bund this morning. So the ZN, the US 10-year, and all the others are doing exactly the same. And the bonds are a huge driver of gold and dollar yen. So, you know, people who are hoping gold is going to find a bottom, you know, are really hoping that these bonds find a bottom too. So that's why I think it's important, and that's why I just think we could see quite a decent bounce from here. So that's what I was looking at in the bund. And then I wanted to show you USD ZAR, which is quite an interesting chart. I know everyone's talking about the Turkish lira today.
Looks a lot like the bund. That's it.
I know. I've had some trouble with my computer. I hope this loads.
Just the pattern.
Sorry?
The pattern in USD ZAR kind of similar.
No, the chart hasn't changed. It's not loaded.
Oh, no wonder it's so similar.
Yeah, no. I might have to give you back the control while I sort this out. Or the wonderful Gregor is coming on, isn't he, to save me? So,
the Wizard of Waves.
The Wizard of Elliott Waves. I'm not going to be able to show you, I'm afraid. Why don't I? Let's go to the chart. Here we go. USD ZAR daily. Okay, so in the USD ZAR, remember how I showed you how you measure the moves. So right. On these big moves lower in the USD ZAR were also, very interestingly, an ABC corrective. So here I'm going to draw it here like this, and here like this, tidy it up so I can show you. Sorry. So this, if I draw a line here, I'll draw it as a horizontal line. You can see where it's equal here, 1. This is where it came down to. I probably haven't got it on because it was actually an exact touch, so I need to get it right. Anyway, so this was an ABC correction in the dollar ZAR. So this level, if we rally from here, means we've made a ABC correction, which is bullish. And then here, interestingly, if I draw it as a trend line, the USD ZAR did exactly the same again. So
put in a higher low.
Yeah, I put in a higher low, but this correction was also 2 equal legs exactly. So that was the ABC here. So if, and then we broke out this, if you can draw this as a trend line wedge, we've broken out of this yesterday. So when the Turkish lira made its move yesterday, we've broken out of this, but unlike the Turkish lira, which is at highs and has been in a strong uptrend, the USD ZAR's got loads of room to the upside. And if we get above these highs, and reverse the trend and make a higher low, then I think we've got a long way to go. So I think for me, this is probably, as a long-term swing trade, this is probably the most interesting chart I'm looking at. So
any correlation to gold on this?
No, I don't think so.
I mean, that's one of their biggest industries. So.
Yeah, it does look very similar, doesn't it? So if this can make a bottom, maybe gold can. And, this is quite an important trend line you see that we broke. So, yeah, that would be very bullish for gold and, the Aussie. So
great look, Nick.
And the Swissy, like, you know, quite correlated. The Aussie, the Swissy,
Yes.
and the South African Rand are all very correlated with gold. So this is what I'm looking for in USD ZAR. So I'd like a nice dip actually in the next couple of days to buy this one. I think this
One closing question, Nick. We're getting a little pullback in the U.S. peso, I mean the U.S. dollar. You think we're going to hold the recent lows, and what would change your view?
in the peso?
No, I was joking, calling the U.S. dollar the U.S.
Oh, the
peso.
US, in the Dixie, yeah.
Yeah.
So
Yeah.
no, like, and I think it's clearest to see, you know, in the you know, the euro, it's just, it's, you know, the dollar index is right on really important support and bounced, and I think it's, you know, it's been such a long-term downtrend, and the same with the euro. You know, we've been in the uptrend in the euro since the start of the year. You know, we're not going to make a top without at least retesting it, and so I do think that that's what we're seeing just in the dollar index and the euro, and only if we break above sort of last week's highs in the euro, you know, would I say, oh yeah, it's breaking out.
I think you have a chart, harmonic pattern, that would just take out last week's high in the euro and still be bad.
Yeah, I'm just going to log into I'll show you it on ForexAnalytix. So I can't
What a
quite
cool
log in.
website.
I'm afraid I didn't have it ready. I rushed to get here and I didn't have everything ready. I apologize. My technology is not working for me today. I apologize. Let's try. If you have got patience, I will just log in. Hold on. Maybe Greg will come and bail me out.
Greg is here.
Yes, I'm here. Hey.
Hey, why don't you have the screen while I sort this out?
Yeah, sure.
Hey,
Dale,
Pinkert.
how are you?
Welcome to the party.
How are you guys?
$15 cover charge, 2 drink minimum, Greg.
It's very hot here today, 35 degrees, crazy. Okay, so actually, can you see my chart? Right.
Yes, got it.
Okay,
Got
so
Cat
actually
up here.
what I wanted to look at is cable, because I think that it can be very, very interesting. Firstly, if I take a look on the monthly chart, you can see that actually since last year, this recovery is very slow actually, and is approaching previous swing lows. So I think that there are some very interesting resistance zone in the near future. And not only that, on this weekly chart, we clearly have a three-wave rally, maybe even better shown here on a daily chart. And you can see that it's actually a three-wave recovery, ABC formation with an ending diagonal in progress now in wave C, but in final stages. So I will watch this for members very closely, because I think that once we pass these highs from May and maybe clear some stops here, I think that there will be interesting levels to watch for a reversal. I believe that you also see, especially Steve, I believe you are watching some kind of a wedge here, or am I wrong? What your basic technicals suggests?
No, you're right. Also, I think pound yen, I said yesterday, that has a fresh high as well, so you can have a look at it later.
Okay, so what? So you suggest pound to be weaker?
No, I also suggested that pound yen, because everybody was looking for a reversal, I also suggested that pound yen has more strength to come, at least one more leg higher.
Okay, so it's supportive for pound higher as well. Okay, got it. So actually, as you know, Steve, we have an ending diagonals that where each leg should be made by 3 waves, right? So actually in wave 5, we also expect 3-wave rally, we've broken out of this downward channel last week. So now we are looking for a pullback. I would suggest to wait for at least 38.2%. That's normally my minimum objective that I want to see before market may complete or accomplish this setback. There's also this trend line coming to right around 38.2%. So I think that next week can be very interesting for this bounce. And I would be looking for this final push up then for wave C. And as I said, maybe in mid of July, I would watch out for reversal signs on cable and would definitely look for some short opportunities if I see an impulsive sell-off from the highs. But firstly, we definitely have
since I saw this, Grega, I put out an idea to short the guppy early this morning up around 46.65 or so. I'd be booking at least half here, especially in the NFP. So I don't like to be on the other side of the market as you. There might be some more left to the downside, just like you show the pound. But anyone who took that idea, you have some money made, put it in the bank, at least half. Sorry,
yes.
Go ahead, Grega.
Yes, definitely. I definitely agree. Also, euro dollar. Okay, I can take a look at this one as well. Is showing some interesting developments here on the 4-hour chart. What I see is a completed 5-wave rally, so I'm expecting a deeper pullback. So far we have a nice and strong rally to the upside, but it's still in 3 waves here on intraday chart. We are at important 61.8% retracement. I also think that markets will not slow down ahead for long-term parallels. Tomorrow, I don't believe that we will just continue higher with the same near. So as long as we are below this level, I would not be surprised if maybe we will see a turn to the downside here on euro dollar. But definitely, I would watch out for 1.135 level to be overlapped, which would confirm that this was a 3-wave recovery. In such case, I would look for much lower prices on euro dollar. Now, someone would now say why cable is going to the upside, or maybe at least make a new high where euro dollar could go down. I was watching euro pound, and I think that there is definitely a very nice degree pattern on a higher degree chart, which suggests that euro pound could actually be topping out. Okay, and here is, so I'm referring to a daily chart. We have a clear 3 waves of recovery. We spiked above these highs here back from January actually, and we turned lower. So I think that there's just question of time when this euro pound will actually break to the downside. I think that there is a chance that we will see a nice drop here on euro pound.
How about one more marginal new high over the high that we had about 4 days ago?
Yes, definitely. If I would trade this one for maybe and would look for a larger sell-off, I would just planning to add at the highs rather than be stopped out.
Okay, thank you, Greg.
I've got a harmonic pattern in a sterling yen. If you'd like to give me the screen, I can show you.
Yes, sure.
Like it's like a tag team. It's like a relay race. Hand Nick the baton.
Okay, I'm looking for the thing that says I'm getting it, but I can't see it. Okay, here we go. Great. Can you see my screen now?
Yeah, the guppy.
Yes, Nick, we can.
Okay, so here's the harmonic pattern. We've reached the 886 of this decline from, and we're at the 2.618 of this first corrective swing. So if this is just a wave 3, then we're probably only going to retrace, 38.2% of it. But this, I'm watching here, the break of these lows. Here, if we break down there, then I'm going to do this as a pip on ForexAnalytix. That's all I need for a trigger to issue it. I'm waiting to do it.
Yeah, that was kind of the number I gave people early in the morning about.
Yeah, that you
44.
did. Yeah, that was yours. But I just wanted to show that.
Scares, Grega's view on cable scares me. So maybe it's going to be more about yen weakness.
Well, yeah, but here's the pattern you were talking about in the euro dollar, and here's the trend line, from August 20, way back, and so yeah, we haven't come very far, and we're bouncing again, but it is normal, highs take tops and bottoms take time, V tops and V bottoms are rare, so I'm okay. Let's see what happens. Like at least if we break out here, we know, it's a proper breakout. So. That's what I was watching in those, yeah. So that was just my look.
Thank you.
It's interesting, the move in the bonds, would normally, I kind of see the move in dollar yen as a bit of a breakout, but we really haven't gone anywhere, even with these big moves. It's quite interesting. I'm just going to get a bigger time frame so you can see. So this I thought was a bit of a breakout in dollar yen, but we haven't really got anywhere yet. So
yes, I just think that we are going to slow down because of non-farm payroll support. So yeah, I think that we may see even 112 and then go to the upside.
Exactly. Yeah, actually... and dollar yen is like the most sensitive to non-farm payrolls of all of them, isn't it? So.
Grega, Nick, I was saying yesterday to Dale that my pivot is the zone of 111.60 to 112, and as long as this zone holds, I remain bullish. So even if we see a retracement down to there, as you just said, Grega, I will still remain bullish as long as that zone holds.
Yes. Cool. It's very interesting how dollar yen is completely different than euro dollar.
It is, isn't it? But I always think, I wonder, do you think that the dollar yen is pulled by the crosses? So do you think that a lot of trading in the euro yen it affects what the dollar yen does? Maybe. I think sometimes, when the dollar's having a big move across the board and dollar yen isn't quite managing it, I think it's sometimes the crosses that are dragging it down. I don't know.
Yes, so it's not so much about the dollar.
Right.
Yes. But actually, to be honest, it's clearly visible that it's July because dollar is, for example, it's higher against yen. It's then you have it much lower against the CAD. So it's very, very, very mixed dollar position in general, if you ask me.
Yeah, I would agree. Okay, well, I'll let you have the screen back. So that was just my view of the guppy, just because these patterns retrace very hard, so back patterns. So
Grega, euro yen, is it currently on a fourth or on an ending diagonal fifth before a move lower?
I don't hear you.
Can't hear you, Steve.
Sorry, euro yen, I asked. In your opinion, you want to have a look at it. Is it currently on the fifth? Do you consider the move that we saw on the 28th of June to be a fourth? So it's currently in an ending diagonal, perhaps, or it's currently on the fourth wave before a fifth wave up. I think the second scenario is more likely, actually.
Actually, what I think that on euro yen is happening is that we are in some kind of a complex correction up from 2016 lows.
No, I agree. I'm talking about the shorter term leg. We had a clean 5-wave up from April, from the mid of April to the middle of May. Then
so you're talking daily, Steve, right?
Yeah,
daily?
Yeah, I'm talking on a daily chart. Then we obviously had a correction lower, and we're currently unfolding another leg. Yes.
Yes. I will be looking for resistance at 130.
130. So you expect a fifth to finish there?
Yes, actually, maybe we are already there.
Why don't you show the chart?
Actually, I don't know.
I just gave you a screen.
Nick's harmonic pattern is around that area too.
Okay, that's exactly what I have. Do you see there?
Yes.
That's exactly what I was showing in the webinar.
So I'm looking for this 261.8 up there. Also,
where's that come in? 130 even?
Yes. Exactly.
Okay.
And also
Thank you.
there is this wave one. Okay, it was what, 240 pips. So maybe wave four, if we make it like it was finished here, also around that level, 130, and definitely it's a strong psychological level. So
Okay.
for my expectations, I would expect a free wave reversal. And also what I want to show on Euro-Yen here is that we have two equal legs up from 2016 lows. You can see first zigzag, 100%, then second zigzag, now also ABC formation measured from wave X, also around 100.30. So I think there's a very important level that should be watched. Definitely, I will not be looking for any longs here, rather just wait and be aware of deeper pullbacks.
Okay. You know, I never did the bigger structure, but what I was saying since days ago here with Dale, I was telling him that I see another 5-wave up, that it's incomplete, and we expect another fresh high, and we see what happens from there. So what you're saying is that there is a good likelihood that after this fifth is complete, we're going to get a big reversal, not just a 3-waver. Do I understand right?
Yes, it can be just a 3-wave decline or maybe even impulsive, but important for me is that I believe that we will come much lower from those levels, because based on a short-term structure, peak levels, and based on a long-term structure as well.
That's a big trade.
So from the chart, I see there at least a retest of 125 from what I see. Am I right on that, Grega?
Pullbacks normally when these 5 waves are finished, okay, the pullbacks will retrace back to the area of a former correction, which was...
Yes, 125 at least, as I said. It's around there, correct?
Or maybe 126, maybe if you retest the price.
Okay, 125, 60, whatever, yes, okay. So that's a nice pullback, and we see what happens from there.
Exactly.
Okay, what about pound yen, since I mentioned it before, because I was watching that as well.
Yes, actually, pound yen, I agree with Nick, actually. Notice that here, if we make a robust outlook, okay, and just ignore the wave levels, we are actually moving sideways, okay, despite very big swings. So clearly we are at the upper side of a range. I don't believe that we will see any significant breakout of this range just yet, especially if we consider the triangle count. It should be
Is that an ending diagonal on the 4-hour chart that I see on the right hand side? Because that's what I'm monitoring actually.
This one?
Yes.
Actually, no. I'm looking here. Maybe that was a triangle. I have slightly
so
different.
Maybe a 4th wave. Okay.
Yes. Maybe completed. Maybe we are still in here. But I think that it matters. This what Nick highlighted, that we are at potential reversal zone here. Okay. So tomorrow, or I should say the weekly close price, I think it will stay bearish or go close below 146. I think this would be quite strong evidence that we are having some kind of a top here. But technically, as I said, we are sideways, and in sideways price actions you would expect a 3-wave move, so decline would be expected to be seen in 3 waves.
Okay, so there is a potential that we might even see a 600 pip move lower than for E.
Yes, but wave E, that's theoretical. In practical, you know, wave E can
so it can be a lot more shallow than that. Yeah, I know what you mean.
It can be enough even if we drop down to 144 maybe.
Might be enough, yes.
Exactly.
All I could say is, wow. Try and find better research and content in an hour and a half than you just did here.
You're so good, thanks.
We're going to top it off with Adam Button.
I'm only here for Adam Button.
Yeah, Adam, Nick said she was going to welcome you in the green room.
I said I won't be able to do my charts. I'll be entertaining Adam in the green room.
And Grega, thanks so much for your clarity. Steve, thank you too. And Nick, you know, Celio says that you were mesmerizing him. So, Adam, welcome to Face. I'm glad you're returning to us. I'm going to make you the presenter now, buddy. Looking forward to hearing your voice and talking to you. Everybody, this is Adam Button at FX_Button. Also, you can find Adam at Forex Live. How are you, my trading warrior brother? How you doing?
Hi everyone. Hi Nick. Hi Dale.
Hi, Adam. Hi.
I'm doing very well. I'm not sure what I've got. Let me get the
You got real estate prices.
There we go.
You got real estate prices up there, buddy. Before we get to that, economics. Yesterday when I was promoting your appearance here, I said Adam will present his elite seasonal views, and someone came back and asked, what's an elite seasonal view? And I said, good catch, because all of your views are elite, not just seasonals. So I found it very interesting. About a week or two ago, you sent me a Skype message, and you're asking me what I thought about Qatar. And, you know, with things escalating there, Qatar did not meet any of the conditions that the other Arab Gulf states were demanding, and doesn't look like they're going to. And you actually asked me if I thought there could be, Saudi might go to war with Qatar. What's making you think that?
I mean, the list of demands is ludicrous. I mean, it's basically asking them to hand over sovereignty. It's saying, you know, give up control of your media, give up control of your government, give up control of your foreign policy, give up control of your domestic policy, and we're going to review it every month. So what they're asking for is basically taking over Qatar without war. And if that's what they want, and Qatar is denying it, which they have since, or not denying it, but rejecting it, then the only other way to achieve those goals is via violence or some kind of takeover. And, you know, when you look at the big picture, I mean, clearly that hasn't happened. The 10 days have expired. It was sort of presented as an ultimatum, said do these things or else, and here we are at or else, and well, there has been no or else, at least not yet. And you really have to wonder what the idea is. Now it looks more like Saudi Arabia is just going to try to bleed them out with this blockade, and maybe I don't know, try some sort of coup later, or maybe they're in the belief that Qatar will come around to whatever it is they really want if they don't want these things. But
you think the Saudis have enough firepower to fight a war in Yemen and expand into Qatar if they can't find a covert way of regime change there?
Yeah, well, I think Saudi Arabia has this massive military, right? But it's just a completely ineffective fighting force. I think that in terms of numbers, it's huge, and you know, the setbacks in Yemen show that it's really poorly disorganized, poorly operational. But in a bigger picture, you have Saudi Arabia, who is struggling, right, with low oil prices. It's going to struggle to govern. You clearly have some friction within the royal family, and maybe that's been resolved, maybe it hasn't. And you know, one of the solutions to problems is always war. And obviously it's a bit of a black swan, and there are very few people talking about it, but Saudi Arabia is unhappy with Iran. They clearly feel that they have stronger support from the U.S. than they have at any time in the previous 8 years, if not longer. So, you know, they have this window of opportunity if they want to do something that now would be the time with Trump as president. So, you know, why can't it happen? I think they could easily defeat Qatar. Of course, you have Turkey in there. You have the United States base in there now, but obviously they could work around that. So I think it's something that's on my agenda at least, and I'm just not sure why that's not a bigger risk. And you know, since we started to talk about oil's up, what, $5 since the bottom there, so maybe that is part of the story there more than we're giving it credit for.
Okay, Adam, very interesting.
I would like to say one thing about that I'm watching, you know, because politically we had to move all our forces out of Saudi Arabia because they weren't very happy with us there. So we have the West has about a 10,000 strong detachment in Qatar. I know this because my cousin's there.
Yes.
So we're going to, the first sign I think that it's all going to go horribly wrong is if they all move, and we will hear about that.
And you think they'll move to Qatar?
No, they're in
They
Qatar.
move them up?
Yeah, they're all in Qatar. They'll move out
Yeah.
of Qatar. Yeah.
Right. Okay. Interesting.
So I think
Thank you.
that, yeah, so I think for me, and I completely agree with Adam, I love his insight. That's what I'm watching as the first sign that it might all go pear-shaped.
Okay. And Nick has a military background, so. And
Yeah, of course, they should be the best. I would like to ask her, what could they fight a war in Qatar with just avoiding that area altogether where that huge military base is?
Honestly, it would be an absolute disaster if this happened. Like the Sunni Shia split would be complete if that happens. You know, it would just be a disaster. I believe, and I've been led to understand that people are working very hard to make sure this doesn't happen. But, you know, the force, you know, in the Middle East, you know, they've all lined up, Israel, Saudi Arabia, they're all lining up, and that's how the divide is. So the Sunni countries and then the Shia countries, you know, Iran and Syria, and so this is where the split is, and I really think, you know, the Syria problem is really the start of all this. In Iraq, you know, when we went into Iraq and we divided it, this is where it all comes from. So,
you know, and Adam,
yeah,
that support.
Very tricky, believe me. It could all go horribly wrong.
And that support that Saudi feels from the U.S., we all know how temporal that could be. Xi and Donald Trump were pretty good friends at Mar-a-Lago, and now there are sanctions on Chinese banks, you know, potential trade war. So enough of politics.
I just think one sign of the way for me that it's been changing is, you know, when Trump came to power, it was all about he was going to get ISIS, and ISIS were the target in Syria, and the rhetoric has changed a lot to it's about Bashar al-Assad now and less focus on ISIS. You know, the smallest thing, if they can blame a chemical attack on Assad, and I really think they're trying to switch the narrative to make him the bad guy as well. I've noticed that. And I really, the news, I don't know, I think it's quite controlled. I believe about 50% of what I see and not much of what I hear. Like, it's really...
I just don't think, why would Syria perform a chemical attack? I think that's what everyone's asking, that they're winning the war.
Exactly.
It would just be the stupidest thing to do.
And ISIS is on the verge of losing their last piece, their so-called capital now. So, you know, they're not going to go away. They're going to be in a different form. You know, it won't be a caliphate holding land.
Well, maybe they just do what their Saudi bosses tell them, you know. Who knows?
Yes, yes. So Adam, let's talk about...
Bye, Adam, and thanks.
Oh, yeah. You have many fans in here. Nick likes you as much as Jamie Statley. So, partner, what do you see seasonally? I know that, you know, here we are. It's really the first trading week in July. What's on your radar screen for seasonal influences in the market?
I mean, always disclosure with the seasonals, it's just one tool in the toolkit. But, you know, last time we were here, we talked about Aussie strength in June. I think Aussie was the second best performer in June.
Great
so
call.
It works, you know, it works a lot of times when all else is equal, especially when you don't have any drama from central banks or politics. And there certainly is some central bank drama out of nowhere, really, that crept up in June. But July is not a huge seasonal month in terms of trends, but one that is there is yen strength. It's a great month for bonds and yen, and that goes against everything that's been happening in June. Really, the yen was beaten up. Bonds struggled after rallying into June because of hawkish central banks, so on and so forth. But it is, over the last 10 years, the best month for the yen, and that could lead to some weakness in yen crosses, or it would just be really a retracement probably at this point. So that's
they could be pretty deep, like especially in the guppy, right?
Oh, I mean, especially the way the risk trade works right now. You get these ripples in the risk trade. I kind of liken it to, you know, taking a garden hose and whipping it. You see this bubble moving right through the market. because of just you get volatility in one spot right now. It might be bonds, it might be commodities, and I think it just, not instantly, but over 3 or 4 days moves into everything else and eventually kind of ends in stocks. And then you sometimes get this echo chamber going on at the same time. And I think it's a lot of these volatility funds. They look at cross assets, and as soon as they start to see trouble in cross assets, the selling starts, and then the selling morphs into itself because you have so many bets against volatility. And anyway, that feeds back into the yen. Anytime you get a little bit of yen strength,
that's interesting.
You start to see the selling in stocks, and then feedback.
Yeah, that's a contrarian call because a lot of people are saying this recent break in bonds, that's it. Utility indexes come off quite dramatically worse than even the bonds. So yeah, we're looking here at FA, at the potential for corrections and the yen crosses. I have a great question from our community, and you know, you're there and you've made some great calls in Canada. And the question is, hi Adam, is this the right time for the BOC to be hawkish, looking for a large short covering rally in USD CAD into the meeting, maybe 132 into next week? What do you think?
You know, just to finish the previous point, I'm sympathetic to that view on the yen and the central banks. I mean, boons are breaking out on yield today. So, but on Canada, I don't like the timing of what the Bank of Canada is doing, and I think they're going to try to frame it as 2 and done, maybe even just 1 and done on a hike, just to take out a little bit of the insurance from commodities. But do I think there's going to be a short covering rally? I think this is the squeeze right now. I think the market was very long. I mean, you saw it in the CFTC data. It was at record longs a month ago, and it got squeezed hard. And that's why we're down as low as we are. I don't think the market is short dollar CAD. I think the market's still long, so I don't see that profit taking to push it back up to 132, 133 ahead of the decision. I think we go into the decision right around 130, and that's about the extent of what I see it. I mean, obviously oil is the other factor in that, and the ebb and flow there. But yeah, I think it's not all the way priced in. I think the Bank of Canada is going to cut. Obviously not a lot of people saw that coming, me included, until Wilkins stepped up to the podium a couple weeks ago and hinted at it. But from here, I think, you know, it can still drop another cent on the headlines, and then it really depends on the communication. If they frame it as reversing the 50 basis points of cuts they did last year, then I don't think there is that much downside to go. If you look at yield differentials, look at where oil is at, I think maybe 128 is a spot to buy. And the technicals from there, because there are some issues with housing, as I was just writing about, as you alluded to.
Yeah, you're going to show that, but you know what I find interesting? How many times have I interviewed you, Adam, over the years? 10, 15, 20 times?
Not enough, Joe. We don't speak.
All right, yeah. What I see are 10-minute charts up here. So I have a question for you. Is this a time frame that you make a lot of your scalping decisions and news decisions on, this 10-minute time frame?
Yeah, I've got these old, it's an old Netdania chart, and I've been using the same chart package for 10 years at least.
Okay.
And you kind of get used to it, right? You look at it all the time and pick up those messages. And I mean, we monitor the news a lot, so you pick up those spikes pretty well on that time, and you can see really over the last day or so. So it's you know, 15-minute charts are probably a little bit more common, but I've always liked the 10-minute chart, and you really, some of trading is what you're used to and what you've been using for a long time, and that's really what it is for 10-minute charts. And I find it's a good time frame. I mean, I have really everything and flip between them, and you need to know the daily levels, of course. But
it's interesting because, you know, most MT4s don't break it down to 10 unless you customize it. But I found it interesting, a 10-minute time frame, and I was going to ask you, you bring up summer trading, and I was talking about this in a previous interview. Do you lower your expectations because ATRs are compressed during the summer?
Well, I think one of the interesting notes in the seasonals too is that volatility is higher in the summer, and you know the usual rhetoric or the usual line is, well, it's summer, it's doldrums, nothing's happening. But at the same time, you have more of these spikes. In sterling today, we saw it cable up about 40 pips there very quickly. It wasn't news; it was some flow, some technicals. I just popped up that chart there on the right-hand side, and it came off later, and I think I like it, especially when it's not on news. You know, if you have these spikes, and I think just like cable here today is to fade it when you get these no news moves. And as you see over the last few hours, that spike has evaporated. But it is more common, and it is a little bit more treacherous if you're scalping or trying to work in 10-minute trades.
Yeah, so stop hunting is even more prevalent in thinner liquidity markets. They're going to go for the stops for liquidity to put on positions.
Yeah, absolutely. Yeah. The amplitude of the noise is just higher and a little bit more random.
So let your trades breathe, right? Don't suffocate them, trying to trade them with 10 pip stops.
Right, and wait for the opportunities. I think it's like, that's the best advice at any time, though. Just wait for the opportunities, but it's much easier said than done.
Any other individual pairs? Aussie took a pretty good hit on the inaction by the RBA. Kind of went to resistance and came off pretty good. You have Euro up here now, but
yeah, I think
stay here with Euro. What do you think?
Nothing's more interesting than the Euro at the moment. Just buy the dips is back on, right? I think if you look at today, it's the dip. I think everybody was looking for that 200-300 pip dip to buy. It's never coming. We might have talked about that last time we spoke, because all the dips, they get bid up at 100, 150 pips max. And Boone's breaking out today. Yields are up just on my screen there, 9 basis points today to 56 basis points. And that's a big technical break in German yields, and it means probably the ECB is going to be more worried, but I think that's already priced in. I mean, the ECB has been trying to reel it in after that.
Yeah, they've been jawboning it. They use this from an undisclosed source at the ECB, and that's what drove some spikes down. They're going to try and jawbone it all the way up, aren't they?
I think, but they're not working, right? So they're trying this, and the market's still buying that. You got this huge spike. Draghi said the littlest thing about temporary inflation, and the euro was up a cent and a half. They tried to walk it down, and it was a 30, 50 pip dip down that got bid up. And I just think they're waiting in the weeds for the euro, and that isn't going to go away. And that's a trade I really like is not the 150 pip dips, but the 50 or 100 pip dips in the euro aren't going to last. And I like buying it, barring a lot of good news from the U.S. But I think it's going to take more than a strong non-farm payrolls report, or we had some strong ISM numbers just out, but it just doesn't seem to do that much for the U.S. dollar. Whereas if the euro gets a little bit of good news, it's off to the races.
Do you think that this shift is secular or cyclical in Euro USD? Do you think that there's possibly a confidence crisis in the world because of what things that are overshadowing the administration here in Washington, and perhaps his personality and interaction, and people talking about the U.S. stepping away and leaving a vacuum for ascending powers like China, and people just don't want to have they're paring their dollar holdings, which have been quite huge for a long time, and this could be just the beginning of a major decline in the dollar? Or do you see it as maybe a bear market rally in the euro, 140 high, 103 low, back to 120 or so would just really be a bear market rally?
Yeah, that's right. I would more look at it that way. I think you can't bet on a U.S. decline just yet. You need it's been a lot of ineptitude for a long time in Congress, but the U.S. does okay. The story is growth, right? If the U.S. was able to hit something closer to 3% growth this year, the euro would be down at 108. Dollar CAD would still be up at 135. Sterling would still be, 400 or 500 pips lower. So but they can flip a switch and pass some tax reform, and that will happen. Is the U.S. in a long-term secular decline? Well, kind of, relatively. I mean, China is stepping up. The emerging world is growing more quickly.
Right.
Everybody would like to have some diversification out of dollars or not be so tied to the United States, and that will happen over 100 years or whatever it is. But is it an acceleration? Maybe. I think this China, this Trump Xi sort of tiff that you mentioned can escalate, especially over North Korea. But Trump is one of these guys. It's all words, right? And I don't want to bring it back to politics, but until there are actions, it's tough to see. But it could be steel imports, right? That could happen this week, and then we are into the actions kind of phase. And it may be time to reevaluate. So there are a lot of tail risks out there compared to how markets are trading, whether it's Qatar, whether it's North Korea, something else to do with China, Pakistan.
Here's a tail risk, and I discussed this with your associate Ashraf Ladi about a year ago. And that's before the election of Donald Trump and him going to Saudi Arabia, being treated very well. But Jim Rickards has a black swan event that the real depegs from the dollar. Can you see any kind of economic situation in the energy patch or something that would cause them to do that? Because that would be a major shift. The petrodollar is very important to the United States to be able to print. So what kind of situation could cause the Saudis to depeg from the dollar?
I just really scale it back from there and tie everything together that low oil creates changes in the world order. So I think oil is probably going to settle around $35, and budgets are unsustainable, governments are unsustainable, alliances are unsustainable at $35 oil. Some countries will try to adjust, but you're just going to have change in the world with $35 oil that is inevitable, and whether it comes from depegging the dollar or in Qatar or some other sort of destabilizing force. I mean, we're already seeing it in Venezuela, and maybe that has some kind of trickle-down effects to the rest of Latin America or elsewhere. And how it occurs is really, really tough to say. I mean, we didn't even know who was leading Saudi Arabia until 2 weeks ago when the the dynastic changes happened to predict that they're going to get away from the dollar. It's so tough, but you can predict that it's going to be a difficult time, and that lends a bit to bonds and to the yen and to some of these risk trades that are very vulnerable with the S&P 500 at 2,500.
Do you have a view on them? Are they topping, or could there be one more hurrah in S&Ps? What are you seeing? It's hard to call.
I like the hurrah. I still like the longs. You can't get away from it. Just a 3% dividend yield is better than really you can get anywhere else.
So it's still TINA. There is no alternative.
Yeah, no alternative to stocks, and if pension funds need that return. Everybody needs the return, and it's easy enough to fall in love with tech when it keeps paying. It's just one of those things that's going to be very painful when it unwinds. But you need to have this, right?
Yeah, so why are all the pension funds, many, including state funds in the United States, underfunded with such a dramatic bull market that we've had in equities? And they usually need like 7% returns to, keep things whole. I mean, if they're underfunded in this type of prolific asset bubble or increase in asset prices, why are they underfunded? And why could there be a pension crisis?
Well, I think it's just coming out of the crisis that they cut risk, and they were, more regulations came in, so they missed a lot of it. Pension funds did okay by and large, but yeah, I mean, people are living longer, the regulations are tighter. That the money isn't there, and I think if you were to get 3 or 4 years of 5 or 10% declines in stocks, then it would exacerbate the problem, and then maybe they would want to take more risk. And it's just it's like traders. You take more risk when you should be taking less, and you take less risk when you should be taking more. And that's what happened to pension funds. And I think that's just human nature and the nature of the beast. And so how do they get out of this chronic underfunding? I just don't think they can. It ultimately just means people will be poorer, and there will be less money to go around.
So what are you looking for in the NFP tomorrow? And besides the headline number, what should we be paying attention to according to Adam Butt?
Yeah, I think the headline number you can ignore safely. ADP today was a little bit weak. It probably correlates and ADP has been stronger than non-farm payrolls lately, so correlates to something around 100K. But I think the trade for the past year plus is to trade the wage number, and the Fed has pointed to a lot of temporary factors in everything. It's like they're the world's most unlucky central bank. Every month it's pharma prices or cell phone plans going on 10 years now. They would have made their inflation target, but it always seems to be something. And if you look around the world, the wages are stagnant, so my guess is we'll see another miss there. But the Fed is pretty stubborn on wages, but the trade is definitely, even if you get plus 250K and you have soft wage growth, is to sell the US dollar. So the headline, it doesn't matter except for maybe getting a knee jerk to sell.
Okay.
And on the opposite side, if it's like plus 10K and you have strong wage growth, you have to buy the US dollar. I think that'd be a great trade as well.
So pay attention tomorrow after the NFP to Adam's reaction. I teach people to react to the reaction, not predict it, Adam. And thank you again for joining us here in FACE and edifying us. So I'm going to take, my takeaway from this interview is to be looking for potential declines in US dollar yen, and with that happening, some risk off and buy every dip in the euro.
I like it. I like it.
All right, partner.
Thanks
Everyone,
so much for having me, Dale. Nice to have Nick there and the gang. It's so great to check in, and
yeah.
I hope everyone's having a great summer. Let's keep it going.
Yeah. Thank you so much, Adam, my trading warrior brother. I hope pips rain down on you until the next time we talk. So thank you, buddy. Everyone, thank Adam Button. I encourage you to follow him at FX_Button and at Forex Live. And that's a wrap for our show today. You're very welcome, David. Glad you enjoyed it. The guppy, when I talked about taking partial profits, you had some decent money made. Let's see what happens tomorrow. All right, so remember, most of all, I know we're all here just to make pips, but above all, don't just count your pips, count your blessings. And thanks for hanging out in the best webinar on the net, in my extremely accurate and humble opinion. All right, everyone. Have a great summer afternoon. See you tomorrow for the NFP. Let me get a vote here. You guys want to open a half an hour early for the number? Give me a Y if you want to do so. I need more Ys. Okay. Someone wants me to stay up all night. I can't do that. All right. So we will open our webinar 5 minutes prior to the NFP number tomorrow. And so I'll see everyone at, make it 8:25 Eastern. Enjoy the rest of your day. I want to thank Steve Volge for sharing his views. I want to thank Nicola Duke for sharing her harmonic work, and Greg Horvat for coming in here, the Wizard of Waves, showing his excellent work. Adios, everyone. Thank you, David.